Hey guys, how are we all today? This is Simon from School of Trade FX, and I'm going to be talking to you about the use of fundamentals versus technicals for trading analysis. Now, I'll be looking at the Aussie dollar, US dollar pair today, which is something that I have a trade in, and I actually have a short trade in the Aussie dollar. I believe it has a bearish fundamental bias. Now, the question you have to ask is, when you have a bias on a pair and you've got data to back that up, that's all good and well. But the problem is entering the trade. Finding the point to enter the trade is where the technicals come in. Now, you can have a fundamental view that the Aussie dollar is a short buy, is going to be going down in price, but you need to find the point where you want to enter the market, where the price isn't going to go against you too much to start with. So that's where your technical analysis comes in. And I like to use Fibonacci's to find high probability levels where price is going to move in my favour. And as you can see, I also use support and resistance. Now, if you look at the Aussie dollar pair, it's repeatedly gone into this zone where I've marked in blue here, and then bounced off this level quite a few times, and then headed to the downside. It's retraced, bounced around in the zone again, and headed to the downside again. So it's history repeating itself. Now, the question that where the technicals come into play is, where do I enter the market? Okay, so if we zoom down to a 4-hour chart, and we'll see some of this lovely price action here. This is zigzagging, and you might ask yourself, well, how do I know that this is in a downtrend? Well, the easiest way to tell that is, say, obviously you can just see by looking at it that it's heading down, but the technical version is that the price is making lower highs. So these points here are the highs, and they're consistently heading down, and lower lows, which are these points here. Okay, so you might ask yourself, well, where do I get into the market here without getting too much price whipsaw against me? Well, this is where your Fibonacci's will come into play. I like to draw a Fibonacci on some price here, and as you can see, prices move down. People are taking profit. Prices move back to the 61.8, which is also coinciding with the 4-hour 200 EMA, which is the only indicator that I use, just a trend guide. You'll also get a lot of times when price will bounce off this level, as you can see here, 3 times. So that's telling me that that 200 EMA is holding quite strong. For me, I would look for a breakout, potentially a nice strong candlestick close below this zone here. Sorry about that. And as you can see, this candle here in the 4-hour wasn't a close; it was a rejection candle. This wasn't a close; it was a rejection candle. And then if you wait a little bit longer, you'll see a nice candle close here. That's where I would have taken the trade. Where do I start to take my profits, you might ask? And what we use for that is our trusty Fibonacci expansion tool. And you could have taken a nice set of profits as your first take profit level, right here at the 127. And where would you take your second profit target? I'd put it right there at the 161.8. So as you can see, both of those targets have been met. Price is starting to consolidate a little bit around this level. These are very powerful levels, as you can see. Hopefully we'll see some more downside action for the Aussie dollar. That's about it for today. Just a quick one. Hopefully my sound quality is a little bit better than the last video we put together. And yeah, if you guys would like to contact us on www.schooloftradefx.com, love to hear from you all. Thanks very much for your time.